So if you were dealing with an Amish person who doesn't have a credit score, you just lost a huge portion of what you would look at to make that decision. Would that be a deal killer or no? What does make a good borrower? And this is kind of like, underwriting 101 kind of stuff, but just out of curiosity, like what kind of credit score are you looking for? What's the minimum down payment you want to see? Any thoughts on that?
Yes. So my program, I do not require what's called a full doc loan origination. So I am not looking at their income versus their liabilities. It is simply credit score and down payment. Actually, it's pretty similar to buying a car. And actually, the price ranges are in that similar realm. So I have kind of a matrix that I use. The minimum score for 20% down is a 660, which is kind of like a C rating. And then from there, it goes to 25% down, 30% down, and it keeps increasing as the credit score decreases. That is more risky, not including a full underwriting of the borrower and their assets and liabilities. It's also easier and faster, though, to get the deals done.
Yeah.
So my biggest concerns with the borrower are credit score and down payment. I do require a larger down payment, and that's part of the reason why I don't recommend that anyone does a deal with a zero down payment. Down payment is extremely important to preventing default, in my opinion.
Interesting.
In credit score, there are massive industries that are based entirely around that credit score. I know people will say that it isn't important, but in my opinion, that's what I'm basing the decision on. I think it's also important to look at what's on the credit report. Unfortunately, people will have typically pretty good credit, but then, it's sad, they'll get sick, they'll have all kinds of medical bills that they don't pay, and that really destroys their credit score. I heard a statistic that the number one reason for bankruptcy in the United States is medical debt. I think it's important to look at the report itself more than just the credit score.
Yeah. On that, the thing you were mentioning about the lower the credit score goes, the higher the down payment you require. So is there any cutoff point at which you're just like, nope, sorry, it's too low? The answer is no. Or could it be like, I don't even know what the lowest is, but could it be down to zero or whatever that bottom out is and say, yeah, that's fine. Just make a 80% down payment. Or I'm trying to ask a ridiculous question just to understand like what is the actual limit for that?
Yeah, so I never say no.
Okay.
I will take any credit score, but you'd be looking at a 50% down payment, which, is really high and most people are not willing to do.
And the reason you're okay with that is because say if they just never even make the first payment, it's okay because you have full access to this piece of collateral that you've already collected or, that you're only in for a lower amount of money so that the value is there for you to cash in on if you have to. Is that right?
Correct. Correct. So in that situation, I doubt that would happen just because somebody's put down such a massive down payment. I don't think that they would immediately default, but a year down the line, if they default, I feel like my investment in that property would be low enough that I would feel comfortable handling the default.
So if you were dealing with an Amish person who doesn't have a credit score, you just lost a huge portion of what you would look at to make that decision. Would that be a deal killer or no?
No.
Okay.
So there's a thing called I10. Are you familiar with I10 loans?
Oh, is that ITIN?
So,
like without a social security number? Yeah. Okay. I got you.
So there are people in the United States who do not have social security numbers who use I10s to purchase property, and the big banks allow this. I have never seen it, but I would not say no to it. I would allow an I10 purchase. It would just require a higher down payment.
I'm liking how it seems like there's always a way. As long as something comes in to
There's
support.
always a way.
Yeah, that's cool.
There's always a way. It's a matter of will the buyer or the borrower be willing to agree to it.
Based on what we've talked about so far. So it sounds like the person's sources of income, you don't even look at that, right? That doesn't matter to you?
I don't. Okay. Now, let me say that regarding Dodd-Frank, if someone is going to be living on the property day one, first I would say consult an attorney about whether or not this is required, but I think it's probably a good idea for you to run that scenario through a full underwriting. If somebody is buying the property as rec land or hunting land, or is just going to go there on the weekends, that's an investment. And I'm comfortable in that situation, not doing the full documentation of full underwriting. But again, if somebody is saying, I'm going to live there, that's going to be my primary residence, you're probably smart to A, consult with an attorney, and B, to call the underwriter.